take a look for yourself and see how important that level was going to be at the cash open today. What do you guys think? What do you guys think? Is this going to be very important at today's cash open? We give a shout about this, as I said, all morning this morning. We had this level here, sell side. And then the most toxic buyer came in right there, didn't it? We got the best toxic buyer of the day at that price. We got a retest there. We got a retest there. We got a retest there. We got a retest here. You know, you can see it so often that this price is going to be so important for us going forward. And you can see that these key levels in these areas, the takeaway and then the retest into that 65 has been so glorious. It's been unbelievable. Good trade, right? Very good trade. So again, it comes back to that question of what's driving today's market. What's the most important thing that we need to know about today's market? That price there. It's not a single line. When we try and mark these, we're trying to give you guys a little bit more information simply by making it emphasize it a little bit more when we start typing out these areas. So one of the things you'll be able to recognize in last night's tweets is I add an M. It doesn't sound like much, but I add an extra M for the major level. So you can see here that we've got the S&P keys, 39.78, 1 M, 39.65, no M's, 39.54 to 56, 2 M's. Well, actually, it should be 3 M's or 4 M's or 5 M's, whatever you like, but you get the basic idea. This is the major level. Also, we're above the floor. And because we're above the floor, we know that net, we should be bullish the market. We should be trying to be long the market because the floor is now bullish as an RGL as well. So we've got that bullish quality about the markets coming into the cash market open. And that's what we see. That's how we deal this, right? So we now have a very, very strong case to be bidding into this 54, 56 level. And we can see that, you know, if it hasn't been tested and it hasn't shown us any information prior to the open, if it's just blown through it, well, it's no longer important to the dealers. But the fact is that this was being told to you guys last night at midnight, and then it's been active so often since then. You're obviously looking at it going, my goodness gracious me, that price is getting a lot of attention. So in other words, the dealers are, it's not just that we think the dealers will be active, which is obviously the case. We don't know if the dealers will be. The price hasn't traded there yet. But the point is that we think it'll be active. But now we can actually establish that this is active because we can see so much activity at the price. So we now know that this is going to be one of those extremes. It's going to be one of those extreme prints that we then look at and say, right, how are we going to make money out of this extreme? And then when it traded down into that 55 print, we simply annihilated it from that long side of the market. And we've ended up getting a fantastic upside on the S&P. 55 is up to a high price of nearly 75. So I know it's not $1,000 yet, but it's not the fact that it's not $1,000 and that's therefore disappointing. It's the fact that $1,000, you know, we take what we can get, right? And when it's such a high probability trade, especially when the dividend kings opened bullish, especially when the volatility hadn't dropped at all during that phase, especially when all of these elements start lining up for us, we're simply looking at it and go, give me some, just give me some. I want a piece of this action. I want to be in this bit of business. The ABCs were divergent on that price as well, weren't they? The ABCs were divergent at that point. Not much of a story in terms of much else to write home about. Volatilities had been bullish going into that, but they've kind of averaged out since then. But they were definitely very bullish into that low price at that stage, so there was no reason to not take the trade. Yeah, and I think it was just one of those trades that we just looked at and thought, you know what, we're probably going to be on a good We're probably going to be in a good narrative here. Now, I don't think it's mega bullish, by the way, today, guys. I don't think we're in a market that's screaming at me to be long at any stage and just to be holding that long forever and a day. I don't think the market's as good as that. But take a look at our volatility narrative from the classroom we did, the VXX VIX narrative. We know that this is one of the most powerful narratives because we obviously get that VIX during the day anyway, so we can see whether this is bullish or bearish. Take a look at that. Take a look at that 54.56 price area first of all. So that we can see that 54.56 price area. You can see that into that price area, you can see that it was slowly diverging off the lows, but then it went bearish again. As it dropped off of the lows and it went bearish again, we can see that it finally changed itself around again, and it started to give us that very strong volatility divergence at the low price. Remember, this is almost a 1.0 correlation. This really is almost a 1.0 correlation. It's not as good as 1.0, but you get the basic idea. It is a market internal for equities. And as a result of being a market internal, it's part of that pricing mechanism, but it doesn't have the same lag as a pricing mechanism does. But you get the basic idea that buying into any of these dips would have been a successful play. And from that point onwards, the pullback at the 50 was beautiful. The pullback at this 50 has also been relatively beautiful and straightforward, yeah. You can see the next pullback into the 50 was from here to here, so you're already recognizing where that 50 was. Yeah, everybody got that one? I assume everybody got that one as well. Yeah? So we got another 50 pullback just there. Perfect example of a trade. Value looks fantastic. And obviously top edge value I think is a bit dubious, which is why you need the full 50. The full 50 pullback trade in these areas. But we need that 50 pullback to come back down again. But you can see obviously that the price should be at least being able to test up into that 73 to 74 area during the course of this phase.